Hello, it's Rupert Honywood from the Property Advisory Service. This week, we've actually got a really interesting topic for you, and we're going to be discussing this whole aspect around why is buying property such a challenge in the UK. A lot of people really complain about this actually because the legal system over here, legal process has got a number of advantages, but actually there's a lot of things that people don't like about it either. So we're going to be debating that point. And in particular, we're going to be discussing these five main issues around it. So we're going to be looking at what's happening with property prices and how they are outstripping the ability to be able to save at the appropriate rates. We'll look at regional differences and the effects that actually has, mortgage accessibility and how earnings are assessed, how government policies and legal processes are affecting the whole buying and selling process, and also why estate agents only represent the seller when actually the buyer is totally unrepresented. Okay, and that's really what we're going to be debating today. So without further ado, let's get it straight into it. If you feel you enjoyed today's session, by the way, I really appreciate if you could like the live stream and also share it if you feel it's appropriate, and you're very welcome to subscribe if you would like to be notified of future sessions. So in terms of today's session, the first point that we're going to debate is really about rising property prices outstripping the ability to save. This is a really big thing actually, because for example, you've got a property at 500,000, and let's say property prices are going up 10% over a year. Well, that means just to stand still, you will have had to save £50,000 to actually stood still over the 12-month period. And that, from the vast majority of people, is a very big challenge, okay? Even with very modest property price inflation of 5%, that's still 25,000 in a year on a £500,000 house you need to put away just to keep up with the growth. Okay, so and this is a particular problem that hits the southeast and London in particular. And of course, the more that interest rates are reduced, this is the dichotomy of it all really, the more it tends to push up the property market because it just fuels demand. Then, of course, you've got the real challenge about rentals, the rate of inflation as far as rental values are concerned as well, which is another big topic. So you've got people having to, living in rented accommodation who are really caught in a trap because they need to move, but then there's an affordability part. And we've obviously had a very high period of inflation. Thank goodness that's settling down a little bit again now. But there is a lot of talk that as we get into the autumn and winter, that things will start going up again, especially to do with energy costs and people's disposable income. And clearly, people need to keep a really close eye on that. And then with first-time buyers, there's a perpetual challenge for the reasons I've described. Because if you can't save fast enough, then you always have a challenge in terms of building up a deposit large enough to be able to buy a property that you can afford to live in. Okay, so those are some of the main things around that topic. Now, what I plan to do is really debate around the whole area around regional variances and the lack of affordable housing. We've already touched on the differences between London and the southeast versus the rest of the United Kingdom. For example, in the southeast, it's not uncommon for property prices to be 3 times or even 4 times what they are in the northeast, especially. So you get some real challenges over that, where people physically find it really difficult to get on the housing ladder. Yes, there are some new developments going on, and the new government is openly said it wants to rapidly expand its construction rate of new builds, etc. that are coming out. But that's all very well. Quite often, some of the new builds are deemed relevant for social housing. Now, that's clearly a really good thing. But where you have to really watch it is the trend at the moment is quite often to build, quite big, tall blocks of flats And my view personally is if you're looking to buy a property in a building which is more than 4 stories high, you need to really question whether you're making the right decision over that. It doesn't mean to say you're making the wrong decision, but the reason 3 or 4 stories is particularly significant is that once you get to certainly 4 stories and above, you really need to have a lift in most properties, especially if someone's a little bit has got a bit of an infirmity, who has some disability, is disabled in any shape or form. Clearly, that's an issue. The moment that a building starts to need to have a lift, and especially it starts to become a bigger building, then you talk about having to have a reception. When you've got a reception area, you've got a lot of communal areas. When you've got lots of communal areas, the service charges tend to be disproportionate. And for example, there are some new blocks builds going on in the Croydon area at the moment. Now, some of them are very nice inside. You go inside them, and I've been in a number of them as well. You've got 1, 2, or 3 bedroomed apartments. Lovely when you first move in, but then you realise that actually there's no parking around there. There's no parking provided, so you're totally dependent on public transport. Now, for a young mobile person, that is probably absolutely fine, but people's circumstances change, and the biggest difficulty with some of these types of properties as well is that for the very reason I've just stated, people's circumstances change. It may be that initially when they first buy the flat or apartments, they're single. They then get into a relationship. It might be then that you might a little sprocket might come along. If I can call a kid a sprocket, and then suddenly you find the place you moved into is actually too small, and that means you potentially then need to move. If the property market happens to go against you, and then you can find yourself in a situation where you've got a high percentage mortgage, where you suddenly fall into negative equity, and then you fall into a trap where you actually can't afford to move, because whatever you're selling property for is going to be less than what your mortgage is, and that creates a lot of challenges. And then the other big thing around that is, especially with the taller blocks of flats or apartments, is invariably the service charges might be reasonable to start with, but when you get to year 2, 3, 4, 5, you suddenly find, surprise, the service charges all dramatically increase. And once the service charges get very high, then a lot of people don't want to buy. And then, of course, because of the way mortgages are assessed, there's a really big issue about affordability for new people coming in. So we're going to debate that a little bit more in a moment. Okay, so again, if we look at the north-south divide, clearly people sometimes find themselves being forced really in a position where they need to move to another part of the country because of affordability. And obviously, where possible, people want to live close to family and friends for entirely understandable reasons. So it's worth just understanding that. And, once you get on the housing ladder, it suddenly does tend to get a bit easier under normal market conditions. So what we're going to really do now is debate really this whole issue around mortgage accessibility, how earnings are assessed. And I've talked about this in some previous weeks, so do feel free to go back over that. But generally over the last 2, 3, 5 years, whilst mortgage rates will recently have come down, and therefore in some senses affordability is better, what you've got is basically criteria being imposed by the Bank of England, etc., and the FSA on lenders to do a lot more around measuring affordability. Now, that's all very well, but the difficulty is, again, a lot of, especially new builds, have service charges attached, and that can dramatically affect your deemed affordability in buying another property. And obviously, things like your credit rating, your credit worthiness comes into it, job security, and then you've got a whole aspect around, deposits, what the deposits are actually required. And then, of course, the so-called gig economy. Well, really interesting, and this has been accelerated by, the pandemic. I know it seems like a long time ago now, but basically you've got the impacts of the gig economy, where more and more people are going to start into self-employment, or perhaps starting up a small limited company. And in fact, our son's actually planning to do that right now. Actually, he's aged 27, 28. He's got a quite large amount of money saved away, so he's in a good position to start his business. But the difficulty is, a lot of people, if they're a sole trader, perhaps unless you tell you've got 3 years worth of accounts, it can be very difficult to get a mortgage, or certainly a mortgage at the right multiple to enable you to buy a home. And the same applies with a limited company. Lenders will typically expect to see your accounts. They expect to see your pay slips, the usual things that you would expect. So it can be great starting a business. I'm very much for it. I'm a bit of a stereotypical entrepreneur myself. But by the same token, people need to be aware of the challenges that also presents. And this whole aspect around debt to income ratios and how lenders assess it, well, if you've got student loans, for example, so let's say you've been to university, that comes into play. If you've got money on a credit card, then that comes into play. Now, to a certain extent, it's a bit strange, this, but if you look at things like credit scores, for example, if you've got a credit card and you are paying it down every month, either in full, or even if you've got a little bit of a balance and you've consistently paid every month, that can actually help as far as your credit score is concerned. So you may well find your credit score could be quite high, but then when the banks do their affordability criteria, that you fall down on that one. So if you have got a bit of a balance on your credit cards, before you put your application in for a mortgage, probably try and get those cleared down. Because by then your credit score will have improved anyway, or got a good credit rating, but then they're not factoring in the cost of servicing that debt into your financial obligations, therefore affecting your mortgage accessibility. And then sort of really moving on to the next point around government policies and legal processes. Okay, and by the way, if you have got any questions, do ask them in the chat. I will try and answer them at the time. If not, and you're watching a recording of this, then I will try and answer these for you afterwards. And of course, you can visit our website, which is propertyadvisoryservice.org. That's propertyadvisoryservice.org, and you're welcome to have a look on there as well. But so moving on to government policies and legal process. Obviously, there are a number of government schemes. For example, there's Help to Buy or shared ownership. And you also can have certain stamp duty exceptions where your property you're buying is below the threshold, so you pay no stamp duty. But again, in many ways, you could argue that stamp duty unduly penalises people in the South London and the Southeast, because chances are, if you're buying up north, for example, properties are probably below the stamp duty threshold, where in the Southeast it's very difficult to get anything below the threshold, so you invariably get caught paying stamp duty. And then even with a shared ownership, you can actually end up by paying stamp duty, even though the property is actually below the stamp duty threshold. Now try and work that one out, and that's not something that gets talked about, but it is actually possible to get caught like that, and you suddenly find that when you're getting quite close to exchange, your solicitor says, "Oh, by the way, we all thought you were going to be exempt from paying stamp duty." Well, unfortunately, there's a little gotcha here, and you may suddenly got to find a little bit more money. Again, a mortgage broker, or maybe to assist you with that, or you can equally contact us now. We can only offer informal guidance and advice, but we may be able to point you in the right direction. Then the whole other aspect is this whole thing about the legal administrative process. Now, the system in Scotland is very different. If you ask a Scot, they will typically say their system is much better. And in some senses, it actually is, because you can have situations in the UK where people withdraw from a sale without good reason. And that causes lots of distress and anguish, and perhaps thousands of wasted costs. And of course, in Scotland, that doesn't really tend to happen to the same extent. But you do still get other problems with, where sales fall through, even the Scottish system. And unfortunately as well, the other thing to just bear in mind is two aspects really. Is you need to put yourself, if you are buying a property, in a really strong position to start with. So if you've got a house to sell, make sure it's sold or at least under offer and your chain is complete. But also if you're borrowing money, you need to ideally get yourself in a position where your mortgage is agreed in principle. Okay, now it doesn't mean what it did a few years ago. A few years ago, they would do all the credit checks and all this type of stuff in advance. So that would put you in a really good position to buy. Nowadays, because of the way things have changed, it's actually more of an indication of likely approval rather than an approval. Okay, and quite a lot of lenders don't do their credit searches, investigations until the buyer has actually found a property, which unfortunately is a bit of a retrograde step, I would argue. And it's done for cheapness or cost rather than actually for efficiency. And then, of course, the conveyancing process, you get some very good solicitors who are really on the ball. Unfortunately, because solicitors aren't particularly incentivized by when a property, unlike possibly an estate agent where they don't get paid unless the sale actually successfully exchanges completes. Solicitors don't really have the same level of urgency imposed upon them. And what I would suggest as well, don't go for the cheapest solicitor as well. There are some very good conveyancing firms out there, so I don't want to knock conveyancing companies generally, but unfortunately, a lot of them are conveyancing farms, and the quality of the service delivery is actually not very good. They work at quite a slow pace, and if there's any sense of urgency there, they're not typically the best people to go to. So, make sure that when you do speak to your solicitor, you get some undertaking commitments of what they can do. Make sure they're really on the ball, set them clear targets and goals to aim for, etc. And also make sure you are aware of the stamp duty implications, whether you understand how much you're likely to have to pay, so no nasty surprises in there as well. And obviously, when buying a property, check things like planning, what's going on with planning and local authorities' decisions. And with a lot of these things, by the way, we can actually help you because we've got access to pretty well most of the details, most of the properties in the UK. And if, for example, you said to us you're buying 33 Acacia Avenue, what details have we got on that? We can give you, we've got about 35 different data access points we can look at, which we can make available to you to help you with that buying decision. So moving a little bit on from that, please say we're doing very well for time, actually. So if you've got some questions, do ask them in the chat. So let's come on to this whole topic. And so estate agents typically tend to represent the seller. That's what we know of them in the UK. We're a bit different, actually, in many ways. In the US, for example, they call them real estate agents over there, or realtors, as another word. They use a lot over there. The commissions are off the scale over there. You perhaps pay between 5 and 7% when you come to buy and sell a property in the US. And you may have agents that represent the buyer and have agents that represent the seller. Okay, and quite often they can be the one and the same. In many parts of Europe, that is the case as well. In the UK, it's actually quite unusual. The vast majority of estate agents represent the seller only. So what that basically means is when you come to find a property that you like and you want to make an offer, you've got to bear in mind the estate agent is acting for the seller. And of course, he or she or they actually get paid on results. So although they may appear to be your best friend, and of course, most of them are really nice people, of course, in reality, they're going to get you to pay as much as you possibly can bear in order to benefit them and their client. Okay. Now, actually, buyer's agents are starting to become much more relevant in the UK. And probably those of you who've seen Location with Phil and Kirsty, for example, will be very familiar with the series. And effectively, they're acting as buyer representatives. Okay. And there can be a big advantage in having a buyer representative because what that basically means is that they can do the negotiation for you or with you, or they can advise you what to do. They can even help you find a property. And there are lots of ways you can find properties which are not routinely available. So, for example, there's a so-called hidden property market, which you touched on a bit before. We can discuss with you how to access properties which are not even on the market yet, and how to get to potential sellers. And of course, if you can put yourself in that position, if you're in a very strong position, it means that you could be at the front of the queue rather than the back of the queue. And that, as a buyer, that can put you in a very strong position to be able not only to have your offer accepted, but also to pay less for the property because your offer is being presented in the right way. Okay, so you probably still will find you'll buy through an estate agent, but if you have a buyer representative agent or someone who's representing your interests, they will be doing the negotiation on your behalf, and that can save anything up to 20% of the purchase price under very optimistic circumstances. More likely to be sort of 5 to 10%, but a 5 to 10% saving can be very considerable. Now, obviously, it's about understanding the property market, how to navigate your way through, and also understanding property market values. And again, we've got pretty well all the data available in the UK on most of the properties, and also the available data in terms of what properties are sold for in those areas. So we can give you quite a bit of guidance over that. And also the other thing to watch out for is got to make sure that the person you're dealing with doesn't have a conflict of interest. What you can't have is an agent to have someone who's representing the buyer and seller on the same property. If it's on two different transactions, that's fine. If it's on the same property, then that actually is a clear conflict of interest. And obviously, transparency is really important in these types of situations. So I'm pleased to say we've actually covered virtually all the major points as part of this session today. And so these are the points we've actually debated and discussed. If you've got some questions, do reach out to me, and basically just contact me on this number you can see on the screen now. If you're abroad, of course, you put the +44 in front and knock out the beginning 0, but that's my mobile number. Might be best just to WhatsApp me initially or send me a drop of text and I'll call you back. But obviously that's our web address, propertyadvisoryservice.org, and my email address. And you may well be watching this live stream over Facebook right now, or YouTube, or indeed LinkedIn. And if you have enjoyed today, please do feel that you can reach out to us, and we will do absolutely everything to assist you. Anyway, thanks so much for joining in today. Really appreciate it, and thanks for your company. Take care. Bye-bye.